which would be, and this is a really great visual. I'm going to be really kind of push through some of this. This one is highlighting the additional benefits or other benefits that 529 plans offer. So in addition, we're starting at the top where our picture of the world is, and we're going to move around the circle to the right. In addition to where your kids can use their money, remember public, private, community and vocational schools and apprenticeship programs and what they can use it for. 529 plans are a really great way for family and friends to be gifting to your children or to their own grandchildren. Especially this time of year, it makes a really great gift. 529 plan contributions are considered completed gifts to the beneficiary. Now, it may be subjected to some federal gift tax, but in reality, the first $15,000, this is going to be a lot of information here, but $15,000 of gift money that goes to a beneficiary, and this is for 2020, the IRS can change those from year to year, is excluded from gift taxation. It's under a special rule for 529 plans, and you can elect to treat the contribution up to $75,000 as if you had applied for that over a 5-year period of time. So you can contribute to it all at one time. Usually that's money that happens when grandparents contribute a large sum of money all at one time, and then they're exempt from the gift tax and can claim that over a 5-year period of time. So there's some good reasons why grandparents may be wanting to do that as well, right? So I want to make sure that I point out too that WA 529, the staff, including me, we don't provide tax advice. So you always want to make sure you're consulting with a tax advisor for more information about tax information. So now we're continuing around with some additional benefits. Your kids have time to consider their plans too. Just because you've opened up this account, they've graduated from high school, and they're thinking about what they want to do, take your time. Don't feel like you have to immediately draw the money out of the account. You really want to talk about with your kids and when they're older, like what their interests are, so that you're really applying that money towards an education that they're really interested in. Our gears are going to represent the flexibility. The account owner maintains control of the account, so they can transfer it to another beneficiary. They can even change the beneficiary on the account. And an example I want to give you is Marian mentioned, or Patricia mentioned when she introduced me, that I'm a parent. My boys are grown-ups now and they have kids. And so I have these grandchildren now. And when my boys still had money left in their GET accounts, I transferred it down to my grandchildren and gave them a little bit of a head start because my boys didn't use up all the money that had been sitting in their account. So there's some flexibility there, right, in how the account owner choosing to transfer. Our gavel represents that the assets are protected from bankruptcy. Our arrow is representing what I'm demonstrating as what's called a direct sold versus an advisor sold type of plan. So direct sold plans are typically lower cost because you can open accounts directly from the plan, right? But if you prefer to work with a professional financial advisor, you might consider an advisor sold plan. Now, the two plans that Washington has, the GET program and Dream Ahead, are direct sold plans. So you can open them directly. You just get them opened online. We'll talk about that in a few minutes. But we do always encourage people to talk to a financial professional for investment advice, because they're going to be able to look at your whole picture and help you make some decisions that fit your goals and the choices that you're making. The account owner, again, retains control no matter how old that beneficiary is. The account owner can be changed at any time, right? Most plans offer really low minimums, so it's really attractive for people, and we really want to encourage people to start saving where they're at. You know, it's the same concept when you're saving for your retirement. You start with what you can save in the moment, and then you plan on how you build into that or grow that and build that up. And that's where gifting from grandma and grandpa and family members comes in really handy too. So the goal is really helping you save and do that in a way that works best for you. Contributions can be made conveniently through bill pay, payroll deduction, if your employer is doing that for you. That's something we can talk about if you have an employer that you'd like to talk to or share this information with. And even automatic transfers from bank accounts. And we still have a lot of families, especially grandparents, who still like to write a check and mail it in, and that's okay, right? Take it any way we can. There are no actual annual minimums or maximums, but you do want to check with the plan that you have to be sure of the overall maximum contributions. And that'll vary from program to program. And then, of course, we're going to end with our shooting star, and that is to emphasize that saving in a 529 plan has the most favorable treatment when it comes to financial aid eligibility. That's another misconception that people have had, is that if they save money or they save money in a 529 plan, then their kids won't be eligible for financial aid. And actually it's not about whether they'll receive financial aid. A lot of times it's really about whether they're receiving grants or whether they're receiving loans, right? So money saved offsets loan amounts. And this goes all the way back to what you guys mentioned in one of the polls as being really important to you, which was wanting to pay attention to, how tuition is the overall student loan debt, not wanting your kids to be overburdened with student loan debt. So let's take it to the next slide. And I'm going to spend
Jackie, there were some questions. Patricia, do you want to pull them now or later?
We can pull them now. I can ask just one since it's rather specific.
Okay.
Kara is curious if you could address one question for her. She says, I've heard that it's better to open an account in another state besides Washington that has better returns. Could you address that and why we might want to choose a Washington account instead?
Well, it would be interesting to know like where that question or where that came from, right? Because remember, backing up to the types of plans, each state has either a savings or a prepaid, right? Now, when we're just talking about the savings types of 529 plans, there may be different fees that's pretty common with the savings plans. There's going to be investment fees and maintenance fees for having the account. With Dream Ahead, there's a $35 maintenance fee, and then there's a small percentage of investment fees. That's very common. You're never going to get away from them. So some people it's a good idea to look at what other states have plans and what are their fee structures. Now, it's the best idea to go get one from another state. What's a good idea? And to always make sure that you're matching that to your goals too, because you can have multiple 529 plans. I'm getting a message that my internet connection is unstable. I sure hope that doesn't kick me out of here. So bear with us if I lose you, I'll jump back on again. But so to answer the question again, I would say, do a little research. This is a great place to start. Talk with a financial advisor, have them look at what it is that you're looking at. Fees are going to be something that you pay attention to. The Dream Ahead plan actually was just recognized as being one of the top 529 plans nationwide. We got it, I'm saying it all badly right now, but we were awarded a bronze level, and that's really good for a program just being open for less than 3 years. So look at the different kinds of fee structures, and I would suggest that they're probably pretty competitive. I hope that helped. Are we ready to take it to this slide? Okay, and I'll remember I was supposed to take pauses in there. I apologize for that. So I want to do a quick little overview of GET and Dream Ahead, because that was something that was important to you all as well, was to understand the difference between the two. Now, again, GET is what's called a prepaid plan. Dream Ahead is our college savings plan, which is an investment-based plan. Now, typically with prepaids, there'll be a residency requirement, which simply means either the owner or the beneficiary lives in Washington when the GET account is being opened. And certainly move anytime after that. There's an enrollment period with prepaid plans. The GET programs is November through May. And now you'll see on the Dream Ahead side, and this is typical of the college savings type of plans, traditional investment plans, is that there are no enrollment periods and no residency requirements. Those are indicators of the type of 529 plan. They are not things that make one plan better than the other. And there are actually only about 10 states that have active enrollment prepaid tuition plans, and you can have both. In fact, it's a really good way of diversifying the way that you're saving, because what's unique about the GET program continues to be the guarantee. So when the state legislature created the GET program, they wrote into law that the value of the GET account will keep up with UW and WSU's tuition growth. So tuition grows, it's pretty typical. Sometimes it may be slow growth, and there have been times it's been huge growth. I think, Zoe, you and I were talking about the period of time when there were 20% tuition increases in the state of Washington at the UW and WSU. So the GET program, the value of the account is keeping pace with the tuition growth. Even though you can use that money wherever your student chooses to go, you draw the money out and you can apply it towards expenses wherever they're going. Now you'll notice on the Dream Ahead side, the value of the account is keeping pace with the investment performance. So that's a lot like your retirement accounts, right? You put money in, rate of returns fluctuate. So keeping in mind, there are times when tuition may be greater growth than investment returns, and other time that investment returns might be greater than tuition growth. So just tossing eggs in one basket and saying this is the only thing to do isn't a good way to diversify. We always encourage people to do a little bit of a couple of different things, because then you're taking advantage of different outcomes at different times, right? So there's no right or wrong way to do it. It's really good to do a couple of different things. But that's what's unique about GET. It will continue to have that guarantee. Now, the program works on what we call a unit system. This is another thing that's commonly confusing to people. The units are not the same as like a credit hour that a student earns academically when they're in school. For us, the unit really is just a form of measurement. So 100 units represents 1 year. It also means that 100 units will be worth 1 year of tuition when your student is ready to draw the money out and you're ready to use that money. Now, when you open up a GET account, you can choose between what's called a lump sum plan or custom monthly plan. Lump sum is what we refer to as a pay-as-you-go. You have no expectation or requirement to do anything specific. You simply make deposits or contributions into the account when you can. We encourage people to develop and to determine a goal and to try to automate that contribution, like setting it up on an auto pay out of your bank account or a payroll deduction, so that you're always making this contribution. And then look at it once a year and think about, can we increase that? Do we need to take pauses? Grandma and grandpa can also contribute monthly. They can contribute birthdays and holidays or milestone years. There's no right or wrong in how you're doing that. But lump sum really, the advantage to that is the flexibility to do what you want, when you want. Now, we also have what's called a custom monthly plan, which is a very structured monthly payment. So you're selecting number of units to buy and a period of time that you're going to pay a monthly payment, make a monthly payment to pay that contract for that. Now, oftentimes we'll have people start with one and transition to another, or do both simultaneously at the same time and have a combination account. Now, on the Dream Ahead side, it is very investment focused. So you're looking at a variety of portfolios, how you want the money invested. Again, rate of returns will fluctuate. Now on the websites, the main website branches off to Get or Dream Ahead. You can get to the portfolio options for Dream Ahead and the custom monthly plan and the unit price on the Get side of the house. right? And I do want to say too, you know, just because of time, there's a lot more information. Normally when I give this presentation, it's an hour long of just this. So I do this. You can go to our website and check out our Knowledge Cafe, and you can join in on any one of my webinars later on, and we can go through a lot more of this. Can you take us to the next slide? And okay, so once you're ready to take the money out of the account, it's actually as simple as bill pay is, just like what we do right now to pay our regular bills. You log into your Get or Dream Ahead account and you request a distribution. Now you might tell the program to pay the school directly, or you might have paid any expense out of pocket: tuition, fees, room and board, books and supplies, any qualified educational expense you've paid out of pocket. You can request to be reimbursed for that, or even tell the program to reimburse the beneficiary. Now you don't have to do one or the other of those choices. You can do all three. I actually did when my son was in college his first year. I did reimbursement to myself after he bought his books and required supplies. And then I told the program to pay the school directly for his tuition and fees. So you can use it, you can pause using it. You really have to treat it like you would any other bill that you're paying for your children's expenses. And the source is like your account and how you're going to pull it out and pay for those expenses. So next slide. So most of the time people have asked well, what if my kids get a scholarship? What do I do with the money? Well, I'll tell you right now, the scholarship is a win, and that's exciting and encouraging that your kids will apply for them and get them. So use your account for other expenses. Again, room and board, books and supplies, hold on to it. Maybe the student will need it later. Give it to another family member, transfer it, right? But you can also refund it. We'll talk about that in a moment. The other one that comes up is if your kids say, well, I'm just not going to go to college. And I think this is the perfect place to talk about, you know, college is not just a 4-year public or private institution. It's not that building that they go to. And of course, you know, COVID-19 has told us a lot about what a building is and what a community is and, you know, how we do business anymore, right? So when your kids are graduating from high school, and actually even before that, when they're starting to talk about what they're interested in doing, that's when you're going to start exploring where it is that they want to go. So immediately they might not want, you know, have a pursuit of a 4-year public or private institution, but they have an interest in the trades or certificated program, or starting out at a community college and transitioning later. So think about that part first. You know, what do they want to do? What is their interest? But also remember, you can wait. You're not in a hurry. You don't have to take that money out just because they've graduated from high school. Transfer it to another family member or hold on to it. And lastly, what I'll say here is about refunding, because it's important to know that where you've put it, you can also get it back. So if you ever refund money from a 529 plan, remember I talked about really early how the earnings portion is growing tax-free. So if you refund it, the earnings portion now becomes taxable. So the IRS would also assess a 10% penalty fee on the earnings portion. Now the program doesn't process the IRS's taxes and penalty piece. In fact, you'll get a tax form if you refunded it. It would come out as you're doing your tax return. But you'd also want to make sure that you're taking a look at the plan that you've chosen, their cancellation and refund policy, because the plan may also assess additional penalties and fees on your earnings or on the account that you have. Now, what's important to note though is remember you've been contributing money and then there's been earnings, right? So if you refund it, you're getting back your money. The IRS assessment for taxes and penalties is on the earnings. And so there would be also, the program may assess some additional penalties and fees, but you would get back what you put into the account. Now, real quickly, if you move, again, I mentioned that you can still put money in and take it out no matter where you or the beneficiary is living or they're going to school, right? And if your family circumstances ever change, you know, call in, talk to the plan that you have, talk to the representative, and they can look at accounts specifically and help you with some different options if you're thinking about changing your plan. In regards to dream ahead, if you're looking at needing to explore other investment options and portfolios, they can help you through that, and even give you some estimates on a refund if you're thinking about needing to find that information out. Can we go to the next slide? We're actually coming down, winding down, so please don't hesitate if you have more questions. Anything here?
Jackie, we actually have quite a few questions. So if you could actually.
Let's just take the questions, because I bet it'll cover all this.
Okay.
Yep.
Okay, Jackie, as Marion mentioned, we've got quite a few.
Okay.
So I'll do my best to go through as many as we can. A lot of questions are coming in about contributions. So for example, Drew asks, what is a realistic goal to save for, and how can we plan to achieve that goal?
Well, always I remind people that the most realistic goal is to start with what you can afford to do right now. You know, I love the analogy of a pencil, like making your plan and using a pencil to make that plan, because a pencil has an eraser and you can always change the plan. So it's always a good idea to start exactly where you're at, know what you can afford. My son, one of my sons, is really young still. He's in his mid-20s, has 2 children. And that's exactly the same thing I said to him is, you know, don't think so far out here. Think about what you can do today, but have the plan to incorporate more. And the more you start to do that and start to see an account build, the more people then realize, like in their own circumstances or their own budgeting plans and how they're assessing that, they start to see that they've got some disposable income that they want to be putting into a college savings plan. So we also have tools on our website. There's a calculator that helps people, you know, make some plan and decision about how much to save based on the goals that they have. Keeping in mind, you know, if you might have 1 child now and then more will be coming. So you want to build in some way of having that kind of expectation. How will you still be able to do that? But always starting right where you're at is the best thing to do.
Thank you, Jackie. We also received a lot of questions pertaining to geography. So as an example, Ariel asked if we are planning to move out of state quite soon, and what are the implications of starting a college savings plan here in Washington if most of the contributions will then be coming while living in a different state?
You know, the only thing that they would need to keep in mind is specifically regarding the GET program. And really, it's just about remembering that the value of the GET account will keep up with UW and WSU's tuition growth, not in other states. So in that respects, with this particular person, the encouragement would be, you know, having a GET account is still a good thing, right? Even if they're planning on moving. So they can still contribute to it, they can still withdraw from it, no matter where they're living. But I think that one of the best things that they could be doing is thinking about potentially, if it's more long-term that they're gonna live somewhere else, there's a resource that's part of in the slide deck that they'll see. It's called the College Savings Plan Network. It is the independent source of all 529 plans nationwide, and you can take a look at what the other states have right now. So it's a good research point for you to think about, like, what plan is available in the state that I'm moving to, and how does that compare with the Washington plans? And then you can, if you're comfortable with the Washington plans, you go, great, I'll do that, even though we're moving. And again, people can have multiple plans. You can have one from every state if you wanted to. We've even seen where one grandparent has a 529 plan from another state, another grandparent. Actually, I should just tell you, it was my own experience. When my first grandchild was born, the other grandparents had 529 plans from another state, the college savings plan, not the prepaid type, from another state, because we didn't have Dream Ahead at the time, and they had other grandchildren. So they had that for my grandson. He was my first. I opened up a GET account for him. So the same beneficiary can be named as a beneficiary on multiple 529 plans. So they don't have to feel like they have to stay here or use Washington's or not use Washington's. It's going to be a good win no matter what.
Thank you, Jackie. There's quite a few more.
Okay.
As you can imagine.
I can.
So Anna's wondering, what are the minimums to contributing?
Okay, so with Dream Ahead, their minimum contribution is $25 when they make their first contribution into Dream Ahead, and then any ongoing contributions, it has to be at least $5 per portfolio. So let's say they picked four different portfolios. If they were doing $5 in each one of them, it'd be a total of $20, right? So 25 first contribution, and then at minimum $5 for ongoing ones. Now on the get side of the house, with a lump sum plan, you have to purchase at least one unit in the first 90 days. Now there's a unit price every year. This year it's $133 a unit. And I hope I got that right because I say it so rarely. 133 a unit. And so they have to get at least 133 deposited into a get account within the first 3 months. This is a great time to be out telling grandma and grandpa, help us get that account opened up. I've done this with my great nephews, nieces and nephews, has given them the seed money to get the first unit purchased in their first 90 days. So it's a really great way to do that. And then of course, ongoing is what they can afford and what they can work with.
And Jackie, you just brought up a family, and Cora actually had the question, which ties into this quite well. Do you have suggestions on how we can tactfully request that friends and family contribute to a college savings plan versus giving toys or other kinds of gifts?
Yes, actually on our website, we have a link that says gifting and a lot of resources and tools there, even how to tactfully ask. But I'll tell you too, I'm a grandparent now, and I'll tell you from a grandparent perspective, I wanted my kids to tell me, like what was important to them. I wanted to support what works for them. And I also wanted to be I had my own voice in this too. And I wanted to tell them, this is what I will do. So I really, what we hear back from people is that it actually isn't very difficult to tell their family about the gifting of that, because they are telling them, we want less stuff for them. Thank you for thinking of our children. We love that you love them so much to give them something, but this is what's important to us. And so a little bit here and a little less of the toys will really help that grow. A gift of education will never go to waste, and it'll always be valuable. And that's probably the best way you can say it. And we've got resources.
Okay, I'm going to try to squeeze in, let's say 2 more.
Okay.
Marika would like to ask, what is the advantage of using a 529 over something like a Roth IRA?
Good question. And now I would emphasize that, Roth IRAs are intended for retirement. So if it's used for education, it's not there for retirement. That's an obvious thing. But it's not really about, should I do the Roth or should I do the 529 plan? If you can find a way to do a little bit of both, it's a really good setup, right? But one of the other advantages to a 529 plan that is not necessarily an advantage with the Roth IRA in this example is that 529 plans, when the parent owns that 529 plan, is considered a parental asset when they're filling out the FAFSA forms, where money in the Roth IRA will be considered untaxed income to the student. So it is a difference between what the student might be eligible for in terms of need-based financial aid, because assets are treated differently than income and they're more favorable. So we always tell people, one of the best platforms you can have for your college savings goals is a 529 plan, and do some other things, but have those in alongside your 529 plan, not an if or. I have some resources for that too. Of course I do, right?
Okay, let's do one more here. Sorry, there's so many here. Let's go to something that's really dreaming big. So Mandy is wondering if, for example, the US higher education became free or near free by the time the child enters college, what would happen to the funds within these plans? That's
a good question too. And it actually is like a conversation that people have brought up for years. I've heard it for a long time. Now, the first thing that we would tell you is that, you know, we can't predict the future. We certainly, just like anyone else and any other kind of investment that somebody would be making, it would still be, we would be still lacking the opportunity to predict the future. But in the event that there was ever free tuition, there are still other expenses that come along with paying for a student's higher education. Remember, we talked about room and board, books and required supplies. So there's going to be opportunity to still spend that money. Remember, we're thinking that if our kids, some of our kids may pursue master's or graduate programs that need to be going on. So there's still going to be value in how you're using that money or where the student is going to use it. So I'd start with that. And then I would also say, you know, we know the facts of the program, particularly, you know, we know how GET works, we know how Dream Ahead works, we understand the concept of 529 plans as in general. If there was some new thing, really wonderful as it would be, that tuition would be free, I would love that too, right? I have grandchildren to think of their future as well. And as that would be, we would take direction. You know, the state would certainly provide some direction on what needs to happen. And so we have to work with facts at that time too. So remember, the third thing I'll point out there is remember the cancellation and refund that I talked about. As you're saving this money, remember it's growing. So even if you refunded it, you know, the impact of a refund isn't as great as doing nothing at all. I hope that helped. Do we have any more questions?
I think, Jackie, we have so many more questions that we were sort of texting each other at PEPS behind the scenes to figure out how we can get those answered.
Yeah.
It's 8:02 now, and we want to respect people's time. So I think I was going to go ahead and close us off for the evening. But are you able to stay a little bit longer in case after that, you know, like anyone wants to ask any more questions of you? And of course, we'll have the resource email and be able to share that too.
Yes, and I would also suggest that we, you know, if there is a lot of people that still have continuing questions, we can always set up a separate just meetup where we're just talking the answers to questions. We don't even have, we're not presenting any more information, so to speak. We can just be live like this. We actually do them we do them all the time. We call them Monday meetups.
Okay, wonderful. So maybe we can include those. Do you want to stay after, or do you want us to kind of close up and know that there's going to be more of these options?
I am perfectly fine to stay. I'm already home, so.
Okay, well, wonderful. I think I'm just going to do a quick summary. I'm going to stop this share. And just to kind of wrap us up and make sure everyone kind of has the information they need before they go. If you have any urgent questions that you feel like a Monday meetup's not going to work for you, you're like, Jackie's here right now, I need to ask it. That's totally great. Please stay with us afterwards. So I just wanted to kind of close out sharing that I'm actually a Washington 529 recipient myself. So my parents, when we first moved to Seattle, invested in GET and used it to pay for my college education. And I think just as importantly, they made sure to talk to me about what they could give me and what they couldn't. So between working and the different credits that they were able to get me, moving home at different times, instead of doing off-campus housing and things like that, I was able to graduate without debt, which is an advantage that very, very few of my friends have had. And seeing how debt has affected all of the different decisions they have to make has made me so grateful they made this choice. And the other thing, right, is that if you save early, you ultimately sort of have to save less because of the way investing and compounding interest works. So I think things that are really important to remember, like the most important of all, is just to start now, because these plans aren't just about college. Your child may take many paths, and the savings plan cover all sorts of different ones.
Right.
So I think also, I just want to say thank you to everyone for being here. We're in kind of a weird moment to try to think about planning for the future. And I think whatever big hug you can give yourself and just say like, way to go. I showed up for myself and I showed up for my kid tonight, because you really, really did. And there is this beautiful, bright future out there, even if this year has felt like being stuck in this muck. And thank you for looking ahead for your little one and seeing that. If you would like to support the work of PEPS, there's 3 other ways you can engage with us further. We're going to share the link if you ever wanted to lead a group in the chat. I was able to lead a group that was partially virtual this year, and it was still a ton of fun. Spread the word. All of our groups are virtual now, and not everybody knows that they're still happening. So it's really important for folks to have their community in this isolating moment. So make sure your friends know, make sure your neighbors, anyone who's having a baby knows. And we'll also share a link if you'd like to make a donation to PEPS so more families can have access to these resources. If you're headed out, before we've got these questions, if you want to share one thing that you learned or one step you're going to take moving forward tonight, in the chat, I think that could be a really cool thing to see what everyone is taking away. Yeah, thank you for being here. Start
Thank
now,
you
make a
all.
little
Thank
step.
you. And I'm staying on, so
Yay, thank you, Jackie.
yeah.
Thank you.
So I think probably since we're not going to know, who still has questions and which, question somebody is still here for, if you've got a question, if you wouldn't mind putting it back in the chat. Patricia, does that make sense to you?
Or maybe whomever is here still can unmute and ask the questions that they have. Or
Yeah, absolutely.
Yeah, let's do that. And I'll chime in to cover off some of the questions that didn't get answered. While we're waiting for someone to chime in, Jackie, I've got a few that we didn't get to yet.
Okay.
There was one question about what is the value of an in-state versus out-of-state tuition?
The value of the GET account is always in-state undergraduate tuition and state mandated fees of the UW and WSU, no matter where it's being used. So the value doesn't change if somebody uses it at an out-of-state school. So for example, if somebody has 100, they bought 100 units, and then this year the 100 units are worth $12,000. I'm just picking a number arbitrarily to work with as an example. So there sits $12,000. Now remember, this $12,000 in my example is reflecting the tuition in my example of UW, let's say. So there's $12,000. Now, Patricia, your child might go to a community college. Zoe, your child might go to a private school in another state. And then maybe Jessica, your child is going to the UW. Now, if we all have $12,000, because that's exactly what 100 units is worth that day, or that specific period of time, then how well it's used depends on where our students are going to college, right? If they're going to that private school like Zoe's child has decided to do, it's going to pay towards some expenses, but it's certainly not going to cover everything, because out of state or private institution is much more than the UW or WSU. But in your case, Patricia, if your child was going to a community college, that money could stretch over a 2-year period of time, because it doesn't cost as much at a community or technical school to cover tuition and fees, right? And then in my example with Jessica, if their student went exactly to the UW, then that $12,000 will cover exactly the tuition and state mandated fees, but there's still room and board and books and required supplies and things like that. So there's always a reason why other resources, like financial aid, scholarships, the student working, like Zoe was talking about, she even worked too, right? Grandma and grandpa, contributions coming in other ways, all that helps pay down expenses so that the student borrows less. So chances are the 529 plan money isn't necessarily going to pay for everything. It really depends on where the student goes and how long they're going and how much a family was able to save. I hope that helped.
And Jackie, there are a few more questions here about, if you could highlight some of the risks or disadvantages of investing in a 529.
Well, the obvious risks are going to be what there are with any kind of investing, which is we don't know the future. You know, there was a period of time where tuition was, you know, like when I started working for the program way back in the late 90s, 1998 is when I started working for the program. And so in the early 2000s, late 1990s, tuition growth wasn't much more than at the UW and WSU, that's the focus, wasn't much more than maybe 2.5 or 3.5%. It was nominal and minimal. And at that time, I remember that people were saying like, wow, why would I do that GET program? I could put money in an investment account and get so much more out of it. And that is true. That was true. That was not an untrue statement. But the market fluctuates. And so shortly after that, in fact, after 9/11 happened, the rate of return on investments went down and tuition skyrocketed. And so now the value of people's GET account went tremendously up. It was a moment in time. It was unpredictable, right? But the people who had money just sitting in investment-based types of accounts, they lost money. And then all of a sudden we saw an influx of people opening up GET accounts actually after that, because what they saw there was there's some stability here. There's this peace of mind thing. But we always want to make sure that people understand that the intent, the guarantee is not intended for people to think that it's always going to grow exponentially. There are times when tuition has done that, but it really is about being sure that that money is there when you need it. You know, if you bought a year's worth of tuition, you're going to get a year's worth of tuition. It's not intended to be, you know, but it can happen, you know. So risks would be, you know, there's always risk with investment. We're not tax advisors or financial advisors, so we don't give advice on that, which is why we also tell people to always confer with a financial professional who's looking at all of the things that they're doing. The other kinds of risks are, you know, like you start saving for one child, and I don't know that that's necessarily a risk as it is, you know, something that all of a sudden you go, oh my gosh, did we think of this, right? You start with one child, but then, you know, there typically ends up being 2 or 3 or maybe even more later. And so it really is trying to figure out, how do you still save for them? How do you build in that culture of doing that without putting yourself in a situation where you're not actually living in your here and your now, because you got to do what you got to do today. We all know this because of what 2020 has done to us. You got to do what you got to do today. But we also have to save for our own retirement. We have to save for medical. You know, we have to think about so many different things. And I think one of the best encouragements I have ever been able to give people, because somebody gave it to me too, is stay with what you can do and build from it, you know, and just know that it doesn't have to be a perfect plan. It just has to be a plan. So I hope that helped.
I just got a question in from Gina, and she's wondering, could our family use the money if our child went to school abroad? So as an example, going to the UK or off to Canada?
Yes, there are a lot of schools in foreign countries that have U.S. federal ID codes, which means they participate in the financial aid programs, right? They're administering U.S. state financial aid, or U.S. financial aid, not state. Financial aid. So one of the resources, we never did get to that slide, but we'll make sure that people get to it. The FAFSA website has what's called Find a School search link on it. And so people would plug in, there's like different things that they have to answer. Like, are you looking for a particular state, or are you looking in a foreign country? And then you answer a couple questions and you click submit, and the report will tell you the US federal ID code for all the schools in that geographical area that they asked for, including foreign countries. So specifically with GET, I know that there are students that have GET accounts that are using money in 15 foreign countries right now. Now the money goes over as US dollars, but you know, so the point is though that you can use it wherever that school is. There, in 22 years that I've been working with the program, I could probably count on one hand the number of students who actually use their money at a non-eligible institution. So.
Thank you, Jackie. Gina says, thank you. That was really helpful.
Good.
We've got a few more here. Let's see. So Nicole is wondering, you had mentioned UW. So let's say if the UW school drastically lowered their tuition, could the GET account balance actually be worth less? Let's talk about on a dollar basis than the total contribution.
So the answer to that in short is yes, but let's back up and talk about like context first. The value of the GET account will keep pace with UW and WSU, but whichever is the highest at any given academic year. So sometimes it's been UW and sometimes it's been WSU. So that'll be the first thing. So, and typically speaking though, in all actuality, if tuition decreased like at the UW, WSU would be following suit. So it's not like one will be up here and the other will be down there. Now, the second part of that is that it actually did happen. Prior to 2015, tuition had been skyrocketing here. It was happening all over the country, but I'm sticking with what I know about Washington State. Tuition was skyrocketing. There was actually a period of time that an entering freshman, by the time they were graduating from high school, tuition had increased almost 80% in that 4-year period of time that they were in college, that they started and then exited college. So the tuition was jumping huge amounts, double-digit amounts. In a short period of time. And then the legislature laid it flat. There were no tuition increases for a couple of years. And then in 2015, they reduced tuition for a 2-year period of time. Now by statute, and the statute is the law that governs the program. So what's written in statute is that the GET accounts keep up with tuition growth. So if tuition actually went backwards, then the value of the account went backwards. But what we were able to do, we closed to new enrollments for that 2-year period of time, and we did some pricing adjustments. So because there was, and one of the other parts of this whole story is that the GET account also includes what's called a reserve. So times when tuition may be higher than expected or rate of returns were lower than expected, this reserve supports the balance of the account because the account is required to be solvent and that the state is on the hook. It's their responsibility to make sure that what they're guaranteeing is going to be there. If there's not enough money in the account, then the state is by law required to put the money in. That's what the guarantee is all about. And so the unit price is always having to be carefully balanced to ensure that the guarantee holds its place and that reserve amount is going to be there to cover expenses out into the future. So this is why the unit price increases, right? So at that time, when tuition went that way, but the rate of return on investments went that way, and the GET account and the reserve were well over 100%. So we used the reserve to balance out people who had bought units at a much higher price, and now we realize, oh, they probably didn't need to do that because now the legislature just reduced tuition. So we were able to do some pricing adjustments. We extended opportunities for people to take refunds without program penalties and fees. We gave people a lot of information and resources about rolling over if they were more comfortable with another 529 plan and help them do that. But also what was happening was the emergence of Dream Ahead at the same time. And so once Dream Ahead came on board, a lot of people that had GET accounts, and more specifically, they were people whose students were getting ready to start college, they rolled their money into Dream Ahead because we had a one-time, there was a bill that was passed at that time that gave people an opportunity to roll from GET to Dream Ahead. And it was only ours, it wasn't other state programs, right? GET to Dream Ahead, and they had an increase, a bump up in the value if they did it within the window of time. And then and a lot of people who did that, their kids were ready to go to college right then. So it was a great advantage to get a bump up in the value of the account. Those who didn't, like me, I had a younger, very young grandchild. I was comfortable with the guarantee of the GET account, and I actually had extra units added to the account. So it wasn't something that somebody got billed for. It was already part of the fund. It was already sitting there. right? So the reason I bring that up is because a precedent was set when that happened. Now, we don't know what a future legislative session will do, but what we do know is that the legislative session who made all those decisions protected the investments of the people we had, which is exactly why we did not open for enrollments at that particular. We had a closed enrollment period. We weren't bringing in new people while we made those adjustments. I hope that helped.
So Jackie, I think we have about 2 more here. One is pretty specific. So if you're not able to answer it, then maybe you can point this person to where they might be able to find this information if it is available. So one parent is wondering about if WA 529 can offer historical analysis or a graph to show the comparison between tuition growth as a percentage rate, as a percentage and as a rate of return on the Dream Ahead plan.
Okay. Our directors, Luke, can you hear me? Because Luke is on. And I don't know if he can actually hear me say all that.
Yes, Jackie, I can hear you.
Great. I'm going to turn that over to our director, Luke, and let him answer that one. Thank you, Luke.
Yeah, of course. So the question there is, we do have graphs on our website that shows tuition growth over time. Dream Ahead, it would be kind of hard to compare that because Dream Ahead is a new plan that opened 2 years ago. So, but we do have performance information available on our website that shows since inception what the growth has been on the various portfolios within Dream Ahead, as well as the daily change in the values of the portfolios as well. So that information is available on our website, and we're happy to provide links. And I was just messaging Marion a little bit ago and saying that I did actually capture these questions that were being asked, and WA 529 is happy to type up some brief responses to each of the questions and provide that to PEPs to share out afterwards if that would be useful to attendees.
That would be great, Luke. Thank you.
Yeah.
Great.
Okay, Jackie, I have one more for you from Eric and Amy.
Okay.
They're wondering, would it be beneficial to open up a Get account and a 529 investment plan, or choose just one to stick with?
You know, I always tell people, you heard me say it throughout, diversifying is a really good way of taking advantage of different opportunities and outcomes. So if they have the opportunity to do both, that's great. And it doesn't mean that they have to have a lot more extra money. Whatever money budget amount they're working with, they can put a little bit into Get and a little bit into Dream Ahead. But the other thing, what we typically see is families who have really young children, like elementary school and younger. So this audience specifically, your kids are already in that category. They start with a Get account. And that's a really good place to begin, and to be continuing to save in the Get program right up until the time the student is about at the end of their 8th grade year. Now, at that point, it's a really good springboard to starting the Dream Ahead plan. Now, it doesn't mean that we're telling people close your Get account and move it. We mean just don't contribute to your Get account anymore. Don't put new money into Get. Let what's in there continue to sit there. Remember, there's still 4 years of tuition growth. You're just not putting new money in Get. Now you divert that money over to Dream Ahead. And that's a way that you can take time on the transition. So some people are more comfortable with investment-based plans, and they start there and they stay there. And that's okay. Other people are very comfortable with Get. They're like, I know a lot of people that I've met over the years who say, nope, love my Get, sticking with Get, love my Get, and that's good. Your investments are always a good thing, especially when it feels comfortable to you, when you understand it and you know what you're doing. So I hope that helped.
Awesome. Thank you, Jackie. Since Luke has said that any sort of lingering questions, we're going to go ahead and pass on to WA 529 to answer, and we'll include that in the resources. We're going to close out for tonight. I just wanted to say, oh my gosh, what a big, big thank you to Jackie for your presentation and for staying and answering all of these questions. Super, super helpful. before we all head out, I just wanted to let y'all know that there is going to be another event that PEPS does with WA 529 in the spring. So it's super important if you're able to fill out the survey that'll come in the resource email that we'll send out. And then that way we can make sure if there's anything that you'd like to see covered in the next event, that we make that as helpful for you, for our community as possible. So
Yeah.
thank you all for being here.
Thank you for inviting me too. It was really a pleasure to be here. It was fun. Thank you for letting me do this.
You're the
Thank you,
best,
Jackie. Thank you, everybody.
Thank you, everybody.
Yeah.
All right, have a great night,
Bye.
all.
You too.
Bye.
Bye.
Oh, look at that cat. So cute.
Marion, are we both hanging up as well? And we'll,
Oh, so we're the only ones, I thought.
yes,
Can you
so there's
stop
one more person.
Can you stop recording?
Yes, I will now.